Good evening and welcome to the Trading the Tech Show. Today is Monday, October 19th. So we're going to go over some charts today and see what the opportunities are, just see kind of what kind of direction we have begun to set for the week. Um, so far, today we had the market turned down, I think in the last hours, doing quite all right. And then the market actually ended up turning down for the day. And that was based on the fact that the stimulus talks between Nancy Pelosi and Mr. Mnuchin, um, they're progressing, but there's no answer. And so now we're about 24 hours into the 48-hour deadline that she set, that Nancy Pelosi set, and and she was saying that if there's no deal done, that there's not going to be a deal done before the election. Um, so we're going to take a look today, just kind of see, how that might have affected the market, how that might have affected some of the positions. So I'm starting here with the U.S. dollar CAD. This is our 30-minute chart. Um, on this 30-minute chart, we see that we are trading below our 720 EMA. Our 100 and our 200 are actually in order to the upside, but beneath the 720 EMA. And then we have our 50, 21, and our 8 actually trying to jump over as well. But the 21 sitting on the 100, um, our 50 is sitting on the 200 almost exactly. So it's a little bit out of whack here. But it's interesting because rate is headed up towards the 720 at this point in time. So we're going to see if we get the moving averages to kind of straighten out here. Now, that would be because our Dow Jones ended up in a negative territory today. So early in the day, we had a positive Dow. Starting the morning when we were doing our show this morning, we had 210, 208 points in the futures. So we were expecting an up day. And so we know that the Dow is negatively correlated to the dollar. So when the Dow is up, then the dollar's down. And when the dollar's down, then the Dow is normally up. So that's what the correlation has been so far, just for the last few months or so. So, maybe even longer than that, but, for sure for the last few months, that's kind of what we've been seeing on a daily basis. And so that relationship still exists. So here on this US dollar CAD, you can see that we got we were headed down. We had this trend to the downside. We weren't in full trend really. Our 100 was still above our 200 here. So we weren't in full trend to the downside, but we were kind of creating that, and then all of a sudden, pretty much at the end of the day, we started to rise on this U.S. dollar CAD, and that's pretty much because in pretty much the last hour of trading, we ended up down 410 points. We had that sell-off, and so now the dollar is rising. So right now we're going to wait. We don't have anything that we can do at this point on the US dollar CAD. I think we still have to watch this. Tomorrow could bring an entirely different set of situation, because of the fact that we have the stimulus talks on the table. It's supposed to end tomorrow. Tomorrow is the deadline. So we don't know if they'll push that deadline back or what's going to happen. So the expectation, though, is that if that deadline passes or we close the market tomorrow, we get to the last couple hours of the market and there's no real optimism about a deal being done, then I expect that the market's going to continue to sell off. If we look at the futures right now, it's very, very early right now, but traders have the market up 84 points right now. That could change a lot. So we're going to have to wait and see what happens in the morning when we do our daily market overview show. So based on this, the US dollar CAD, I don't have any, a recommendation for a trade here or an idea for a trade here just yet, because we need to have this straighten out. Now, if the moving averages all get into order, besides maybe the 720, maybe we're still below the 720, but the moving averages get into order, it might be the opportunity for us. The only real opportunity we have right now is a short trade on our 200 or 100 or our 50. So that's really the only opportunity that we have. Rate is below the 720. If you just wanted to place an order there, that's what order we would place. If you look at our order right now based on this titanium effects trader, um, this is this is a short order here, and it's sitting right here, right about this 100 EMA. That's not exactly the parameter for how we short on the titanium. So it's not based on the EMA the way that we short. We're not shorting directly on the EMA. I'm not going to tell you that that's the way the auto trader works. But it's kind of based on pullbacks and then rate between the 200 and the 720. So that's why it kind of executed there. But it's pretty much right in line with what we're analyzing here. So I do keep that in mind when I'm building the auto traders. Like I keep in mind what it is that we're trying to, what we teach as far as trading, with the trend, that type of thing. So I keep that in mind with the auto traders so far, the ones that are developed. So US dollar Swiss, a little bit different story. We do have the widening of the moving averages here. Rate is below our 720. All of the moving averages are in order to the downside. Our 8 is coming up here and trying to meet our 21 right now. But other than that, everything is in order to the downside. So we have basically what we would call a mature trend because we're underneath the 720 as well. And so the expectation is that as this pulls back, that it will continue the trend. We have some widening of the moving averages as well here. So even though it can be a young trend, we would say it's a young trend. We can say that this is, it's a mature trend that we would want to trade on. So as being the US dollar Swiss, what I would do here, we haven't reached the 50 yet. We were kind of pushing towards that. I drop my order maybe here on this 21 if I want to go early, or be, a little less conservative with the trade. I drop my short order here on the 21 level. We're above it right now, so the order should fit there pretty easily. But if it continues to travel up towards the 50, then fine. And beyond the 50, then we could short there or on the 100. Going early on the 21 here is just, according to you as a trader, how you feel about, taking that particular order. But right now, if I throw my crosshair on it, the 21 is sitting out here at about 91.02. The low here is so far is about 90.89. So there's not a whole lot of pips here to the low. So if we get down here, we're going to be looking for a breakout for us to actually get some pips out of that. So that's the trade that I see right now. If it continues up past the 50, then I would say drop your order on the 50 or maybe this 100 if it pulls back that deeply. We may not get that deeper pullback. We've got a little bit of consolidation off to the right here, but with this being a mature trend, I think that we head downward. We look at our stochastic here. Our stochastic is down here below the 20 mark. So that might, indicate to us that we have some more downside pressure going on in the market. As far as our US dollar yen, this is a 1 hour chart. Let's go ahead and switch this over to our 30-minute. We have rate above our 720 right now. So we didn't really come back and test it, too tightly here. So we did come back just a little bit, but I think that was just a function of the market itself. We haven't really come back and tested this 720 yet. So we're going to have to see whether, this holds as a support for us. And then we've got our moving averages actually getting an order to the upside. You can see our 100 is just trying to cross over our 200 here. And then we have our 50, 21, and our 8 to the upside. And order, and then we have rate above as well. So until all of these jump over the 720, we won't really have a mature trend, but we can say that we're developing a full trend right now. If the news is not so great tomorrow in the Dow, I think maybe we might see more of this develop. But it is the US dollar, so I would take that with a grain of salt because once we get past that point, past the point of the stimulus or whatever that kind of works through, traders' mindsets and their sentiment. Once that kind of works through, it's still the dollar, and the dollar is weak at this point in time. So I'm not so gung ho about buying into weakness on the dollar. I think that overall we're looking at downward trend. Let me pull our daily chart and we can kind of see what we've got on the daily chart. So this is our daily chart. You can see that we have full trend to the downside. We have a mature trend to the downside, really, at this point in time. And it's just been a kind of a steady move down, not sharp, but it's just kind of been just lower lows. Lower lows and lower highs going on, just kind of gradually coasting down. We come out maybe to our weekly chart. We can see where we just kind of, it's really kind of consolidating between like a large range here. I'll go ahead and put some lines on this here. It's not super accurate, but it's just going to show us a little bit of where we are right now. If you look at these two lines, most of the trading has happened between these two lines, right? We're definitely kind of, staying in the lower half here now of this particular range. We haven't really hit the high here for a little bit. Remember this is a weekly chart, so each one of these charts represents a week. So we haven't even hit this high since September or October of 2018. So late 2018 is when we were, the third quarter basically of 2018 was when the last time we hit the high in that area. So we kind of started to head up that way just a little bit here in end of 2019 or so. But then since then, we've really been producing lower highs and fairly lower lows at this point. So, and we've got trend kind of setting up to the downside. So this being a weekly chart, we could just see kind of the movement there. See on our monthly chart, just kind of the same thing, kind of that same range, right? It kind of stayed in that same area. Our lines are still there. Our support and resistance lines are still there, but we're trading below, the support line here, even on the monthly chart. So we have had other weakness. If we, this is good. We can go back and look at the history of it. We can go back and see that from October of 2007 until about October of 2011, we were pretty much in a downtrend. So this is what I'm talking about, when I say right now the dollar's weak. And so I'm not really interested in buying in because even though there are going to be times, there were times here, months where we rose, we were still in downtrend. So all we would have really been doing is looking for pullbacks against the actual trend. We can see what the trend was at that time. So looking at it now, we know that we're consolidating off to the right here. We've got, a very weak dollar at this point in time, but it's not as weak as it was previously. There's a lot of room to the downside. I mean, you think about it, we're down here in the 75 area. And right now we're still above 100 at about 106 or so. So 106, 105 area. So we really haven't even really broken 100 yet. So there's still room to the downside if this catches a head of steam and the Dow, continues to rise. Maybe we start to get more of a push to the downside. So we'll see. We'll just kind of see what the trader sentiment is. It's good to kind of look out that far and see what exists as far as history so we can get a real perspective about where we are today. Let's jump over here to the New Zealand's. New Zealand CAD, this is something that we're interesting that we're looking at too this morning, or last night when we went over the trades as well. This one actually turned out pretty good because we retreated up here to the 720. And like I would say is we drop our order here on our 50, our 50 here in blue or our yellow 100 here. And then we had a nice move to the downside. We also had catapult here too. So I'm going to show you that. Since we're talking about catapult a little bit, you can see here that the 50, this candle straddled our 50, our blue 50. Our second candle was red. And so the close on this candle, let's see if we can get our close showing here. Let's see, the close was 0.8717. So our entry would have been 8707. So let me go ahead and drop the line in here. That would have been our entry for the catapult trade that we have. And you can see that we went from 8707 already down here to about 8674. It's not a huge move, but it's still what 30 some odd pips or so down. And it didn't take us that long, and we've got pretty much all red candles, right? So this is the power of the catapult trade. Now, the one thing I'm not going to say, don't jump in on something like this. You don't want to catch the falling knife here, because once we're getting away, our 50's way up here. When we start to pull away from the 50, especially when we start to get some larger candles, like we have a bunch of small ones, and then all of a sudden at the end, we kind of get this large candle pushing away. That tends to signal to me that maybe this is going to turn around for a little bit, or at least pull back against trend. So, we want to be mindful of that. So we just play the strategy the way it is. We look for our straddle candle. We look for the second candle to close the same color. Underneath the 50, we subtract our 10 pips from the close, and then we place our pending order, and then we wait. And if we're patient, we pretty much can get this order. The first candle, this candle alone was profitable, but we may not have gotten out. Now, if you're using stop losses, things like that, typically our stop loss is going to be up here above our 50. So that's where, if you're the kind of person that wants to use stop loss, I don't teach that, in that way. But if you're concerned about your position or something, you're going to be away from your screen, you're a manual trader or something, you're going to be away from your screen and you're concerned about the position, your stop loss is going to go above this 50 moving average. That's your entry point. You want to have it above there, right? Because you remember you got to go to the second candle first. It has to kind of close first. If it closes red, then you're still subtracting 10 pips from that. So the rate really has to travel to go back to a level above the 50 to actually take you out. So it should give you some room for your trade to run. You don't have to worry so much. So I just wanted to show you that too. I know we talk about the moving averages, we talk about trend all the time. But I want to show you when I see these catapult opportunities, I want to show you the nice thing about this catapult opportunity is that rate is below the 720. So we're not fighting rate here. I think when we first kind of started working with the catapult, we were fighting rate fighting the trend a little bit sometimes because we were kind of just finding the catapults all over the place. Something like this. Here, I'll show you what I mean by that right here. Here's a straddle candle. You see the body on both sides of our 50. No, that's not going to work. Here's one, because the second candle's red, so we would ignore this. Once this closes red, we're not interested. Here's another one though. We had a straddle candle here. We actually had two back to back. We had a red one and a green one. But the second candle actually turned green for us, and it closed above our 50. So then we would take this, it closed at 87.27, we'd add 10 pips, so we'd be long at 87.37. So let's see if we can put our crosshair on there. See if it'll work for us. Okay, good. About 87.37, that's kind of like generally the area that we would have been in. And then we went to about 87.50s or so. So not a whole lot of pips would have been gained there. But this particular trade and why it doesn't have as much momentum is because look at our 720. The rate is below the 720. So we're trading against the overall trend. So we're not going to get as many pips with that. We want the short trade. We want the sell trade to go along with the fact that we're underneath our 720. Because it's probably going to wind up going back into trend and it's going to give us a lot more pips. So hopefully, you're getting that down. We'll talk about that more as we go with time. We're going to give you that strategy because that strategy is great. Here's the New Zealand Swiss. I'm going to show you the same thing on this chart here. We have mature trend to the downside because all the moving averages are in order to the downside. We're trading below our 720. We had a catapult opportunity here because we've got, let me make it larger for you. We had our straddle candle. above and below the 50, the blue 50 here, kind of going right through the body of the candle. The second candle was red. We take our close, which was 60.48, and we subtract 10 pips. So 60.38 is our entry point. And so our entry point would have been right about, let's see, let's find 38, close enough, 38, right? So this is our entry point here. And so if you look at where we are now, we're at 59.88 or so. So we fell below 59.88 area. So we're talking there 12, 40, 50. That's about 50 pips that you could gain there. And you look at this because of the fact that it was not, it's, it wasn't fighting trend, it's going with the trend or with the overall trend, we got that momentum to the downside. So that's a couple of opportunities that we had within, yesterday that we had for catapult to the downside for these New Zealands. And they had real potential. Like, how many people do you know that are, hitting 50 to 100 pips on their trades regularly? This is what the catapult does for us. So we just kind of respect trend and we place the order the way that it's supposed to be placed, and we profit from that. So here is our trend for the New Zealand yen on this 30-minute chart. I don't know. I'm really loving the 30-minute charts now. That's not something I always normally would trade before. I kind of was always either like 15 or on one of the companies I work for, was like a 90. So we used to trade catapult on the 90. But I think it's almost better here on this 30-minute. There's something about the 30-minute chart that there's a little bit of balance there that I like. So that's why I'm kind of running the auto traders and things on that 30-minute chart now. I've kind of switched over to that, just the balance that I see there, the movement, the typical movement of the pairs on that, on that time frame. It helps us in kind of these swing trade type situations, and these trending situations. Just the time, something about the time frame is unique. So that's why I'm using it. So we have mature trend to the downside here. This is young because our 50 just jumped under our 100 here. So it's just kind of developing this downtrend right now. Very young. So we're going to be waiting for pullbacks to our 50 or our 100 in order to take an order here. The only other opportunity we had was a catapult trade here. We had our straddle candle. So our 50 is going right through the middle of the body, not the middle, but the body of this particular candle. The second candle was red. It closed at 69.64. So our order would be at 69.54. So we'd only be about 50. I mean, we'd only be about 10 pips into the game right now on this particular one. But our stochastic is turned down. So maybe it's a continuation to the downside for us. Right now, I don't have anything here because the catapult's already occurred and we're not pulled back yet. But if we pull back against the trend, then we might have an opportunity for a trade. On the New Zealand US, same thing, right? We almost got the exact same scenario. We have full trend to the downside. It's fairly new. So we're waiting on a pullback to, past our 21, 50, and our 100. Those are the points that we can drop on our orders. Typically, we're going to drop them there. Sometimes on the 200. But then we did get a straddle candle here. Look, we got a straddle, but look at the next candle. The next candle is green. So we would nix that particular trade, at least for me, because I like to do it the way the strategy is set up. I don't like to, trade against what the strategy says. The strategy says the second candle needs to be red. It needs to be red. So if I get the green one, I lose that particular opportunity, but maybe I'm going to get something else out of this. Maybe I would have gotten, because we did pull back here past the 720, maybe our order is going to be out here on our 100 or our 50. If, in another scenario where this is not past the 720, that might have been the option for us, right? Maybe here, because we were still pulling back, our order would have been maybe on this, the 100 here or the 50 here, as our order. And then we can kind of mature the order as we go and improve the price. As the price continues to rise, the moving average is going to move a little bit. So you can kind of be nudging your entry order, your pending order up with the 50 or the 100 until you get executed on the trade. You can actually improve your price. What about the pound? Let's take a look at the pound. This is the pound versus the Aussie. I think we had some Aussie weakness today because the Euro Aussie did really well for us. So I really want to see, and then the pound Aussie is actually going off to the upside as well. So we're going to take a look at that and see what we got going on here. So we got mature trend to the upside. That hasn't changed. We've been getting some pullbacks, but not very far. We haven't really pulled back past, well, we did here. We pulled back past the 100 here. Maybe looks like, let's see, what date is this? It's going to show me. I don't know. So right around the 19th or so, beginning of our trading on the 19th, we did pull back past the 100. So we could have dropped an order on this 100 or this 50 to buy, and then the market would have taken us right up, right? We got up beyond our 8 out here, and we pretty much stayed out there, at least beyond the 21, acted as our support, and we kind of just took the market up. And we're still in full trend. So I don't see it really stopping. Maybe it's going to pull back, but this might be a great opportunity for us. Our stochastic is above our 80 down here. Just as another type of confirmation, just looking at it, our stochastics, up here almost near 100, right? Our 100 point. So I think that this continues to the upside. I don't think that that it slows down at this point just yet. So we're going to see what happens overnight with it. Does it pull back and give us opportunity to get in, or does it just continue on, moving because it's kind of cruising, up to the upside right now. Pound CAD, let's see if we kind of get the same thing. Not so much in the pound CAD. We have rate below the 720. The moving averages are all on top of each other right now, in a very, very small place. We've got a lot of consolidation kind of occurring here. Not a big range at all. So we're just kind of consolidating to the right. The only thing we're respecting here is the fact that we're underneath the 720. So we're going to place, if we placed any type of trade, we'd wait for the rate to maybe to get a little bit higher here, maybe towards the 720, and then maybe on our, they're all kind of in the same area. So in this area here, we'd right click and sell stop here, right around this 170, 74, 170, 75 area. But I want to see the rate kind of get up here a little bit, maybe retreat towards the 720 a little bit, so that I know the market has moved in my direction before I take this trade. Right now, it's so close that if this takes off to the upside, we just kind of got into the trade for nothing. We look at our stochastic here, it flirted above 80. Now it's down just a little bit below 80, but it's still above the 50% mark. So I have a feeling that there might be some more upside here. There might just be a little bit more upside in that particular trade. It's not my favorite setup, at all right now. It doesn't look like a setup at all for me. So I think there's much better options for us out there. Looking at the pound Swiss right now on this 30-minute chart, we've got mature trend to the downside. All of our moving averages are in order to the downside. And we've got a little consolidation going. That might just be a function of the market because, the Asian session is just a little slow right now. We've closed our market for the day. So this is different. We had the pound Aussie going to the upside, but now we have the pound Swiss actually weakening. So we're going to wait for any type of pullbacks to our 50 and our 200. We actually got a catapult trade here as well. We had one back here. We see our straddle candle. Our second candle was red here. The close was 118.21. So our short order would have been at 118.11. And now we're down here. We've been down here below 117.80. So there are pips there, so there's probably about 30 pips there at least, at the peak, and we'd still be profitable right now. And then we've got full trend too. So that's telling us it's probably going to continue. Our stochastic is below our 720. All of this points to downside movement, continued. So this is why we'd stay in that trade. If we're in a catapult trade, we'd stay in it. We might break even when we get a certain number of pips up, depending on whatever it is that you decide. If you get up 10 pips, 20 pips or whatever, maybe 20 pips, and you want to lock in maybe like 10 and then just let it run, you can do that. It might run 400 pips. We don't know, so that's kind of the way that this is kind of turned out sometimes. So you can lock it in and say, hey, if this trade is good, I don't have to worry about losing money on it. Let me go on to the next one, and then we just let this sit. You can let it sit for 2 weeks if you want. If it's going to continue to roll, let it roll, let it pay you. As far as the pound yen, very undecided here. Rate is above the 720, but all the moving averages are just kind of, not in a great place right now. We started to kind of try to develop some trend here, back here through yesterday, but now today we've got this kind of consolidation happening, and the moving averages are just out of whack. There's nothing here for me to see as far as a trade right now, so that's off the docket for today. Pound US, same thing. We got this little bit of weakness going on here. We're going to see if the moving averages actually straighten out. We are we're just probably just barely below our 720 here. Just trading below it. The moving averages are above. They're not even all in order, so I don't have anything on the pound US. The only thing I have pound wise really is probably our pound Aussie, maybe the pound Swiss, too. Pound Swiss and pound Aussie is what I've got right now. Let's jump over to the Aussie since we're talking about it. Aussie CAD on the 30-minute chart, we've got a short trend, right? Trend to the downside. So we've got our 720 way up here. We've got a lot of distance between our 720 and our 200. So that tells me that, this, of course, being a mature trend, it's been in for a while. This trend has been in for a little bit here. We can see that it started developing way back October 12th or so. And, we haven't kind of come out of it. We've had some times where we've retreated back to the 100. We did it here, retreated back to the 100 here and here as well. So this was the opportunity that we talked about this morning, dropping our order here, maybe on our 100 or our 50 and letting it ride down. So, that would have been a great order for us. We had almost a catapult set up, but we got a second candle here that was green. So we didn't have catapult. The only thing we really had was the pullback past the 100. So when I show you these things, these opportunities come every single day. When I watch, I've been watching some different YouTubes and things like that. And I like to see how quickly they can get to some decision, because they can claim they have all this information, they can have all of this complex knowledge and all of that. But what good is it if you can't trade? I've been in those situations where I've seen people, where I've, sat on radio shows with people who just analyze and analyze and analyze, and they have all this complex information and all these things that don't really pertain to us as traders. If you're an analyst, that's one thing. If you want to be an analyst, great, but an analyst and a trader are two different things. An analyst spends all day analyzing. A trader has to make trades in order to make profit, or your account doesn't progress. So what I teach is that we're looking for the simplest patterns that we can find that produce pips. In the end, that's all we're really trying to do. The market only really does three things. It goes up, it goes down, and it goes sideways. All our job to do as a trader is to find opportunities and patterns in the market that we can exploit to give us those pips, and that have a high potential to give us those pips. So all of this complex stuff that I see, it's like, okay, that's great, and you're trying to impress people with your knowledge. But if you're 45 minutes in and you haven't told us what the trade is, I've done more. What are we in? We're in 33 minutes right now. We've gone through almost all of our charts, and we've found opportunities. We're finding opportunities. We know what the setups are here. Doesn't take that long. We can see them so quickly. Being that it's technical analysis, we can see the opportunities, right? So don't get discouraged because it sounds simple. Believe me, it will still pressure your discipline a little bit. The discipline is going to come with your patience. That's where your discipline is going to be tested mostly. Getting in is easy. We know what the entries are. It's very simple to find, but the discipline is going to be in your entry, right? So here we see that we have trend to the downside. We have a mature trend to the downside here that we're working on at this point in time. We're well below the 720. This is our Aussie yen. So my imagination is that this is going to continue to the downside here. We had a lot of consolidation here from the 15th through the 19th. This is really kind of consolidation. We had a little bit higher high here. I mean, higher lows. We're kind of getting those higher lows going. Let's see, maybe I'll change this color here so you can see it. We're kind of getting that action going on, even, even though it wasn't very, very strong and it was against the trend. So all this really was doing was pulling back and giving us fuel to, to trade to the downside. What I see kind of is this. That's kind of the channel that we're in. So we really, oops, click on it. Okay, so most of the trading was happening in that channel. You can see that it was rising, but it was rising against the 720, rising against the trend. Our moving averages barely jumped over a 100, and then they retreated, and this would have paid us. If we short, we would have told you this morning. I'm pretty sure if you go back and look at the show this morning, the whole idea would have been to short on this 100 or this 50. And that's how consistent we can be. We can be very, very consistent and very quick with our analysis and find opportunities to trade just, just like that. We don't need a whole lot of complex, strategies and all of this extra knowledge about volumes and all these things. You don't need all of that stuff, and that's, why, I think our service is valuable because we cut the fluff and we get you right to the trades. That's what our value is. So here on the Aussie New Zealand, when we look at this, where are we at? We're trading below our 720, right? Here's our 720 up top, our 200, our 100, if that's all in order. The 50 is in order, the 21 is in order. Only the 8 is jumping over, and that's because we're retreating back against the rate, and we're going to put the rate above. Rates above the 50 right now, and then it's, it reached a little bit above the 100 too. So our order really should have been here on the 50. As a short, right? Right now we're getting a little bit of green, so we can probably still place this order here on the 50 if we get a little bit more push towards the 100. I just like to see a little bit of distance so we're not caught in the trade by accident. Remember, we have the spread. So, this is not a lot of distance. It's not a lot of pips, to the top of this candle to this 50. There's not a lot of pips. So with the spread, we might just get inadvertently put into that order, and we didn't really, we're not really ready to do that yet. The market hasn't committed towards, turning down yet. We don't know for sure. It may continue up. So I just like to see a little more distance. But if you're interested, you can place it maybe here on this 21. It's not a whole lot of distance, but it's a little bit more than our 50. I'd place the order on the 21. And if it's committed to this trend, we shouldn't have any problem getting some movement to the downside. And then look at our stochastic down here, well below the 20, right around the 0 marker. So just kind of hanging out down here. So it's been there for a while, right? So, as we started coming down, we dropped below the 20 and we've been there for days. How many days? From the 14th or so, at least through about the 19th, we've been here. So that's the Aussie New Zealand. We're just waiting on this pullback. Drop your order maybe on the 21 or the 50. That would be where I would look to drop my order. As far as the Aussie US, we've got a mature trend to the downside, rate below the 720. So same thing, right? The order from this morning, or the trade from this morning, was going to be an order on our 50 or our 100, moving averages, short orders to go in the direction of the trend. We actually had catapult here too. We had a straddle candle here, red. We got a red close for the second candle. And so our close was 70.85. So our entry would have been at 70.75. That would have been our short order entry. So that's about 7.75 or whatever in the middle. You can see that we got momentum out of that, and now we're down about 70.45 or so right now. So we'd have 30 pips at least to this point, and probably, we're closer, to probably 35, 40, almost 40 pips on this move within just hours. It's a very simple strategy. That's a very, very simple strategy. But there are tons of people that would give anything to be able to get 40 pips on a trade. And they're trading higher volume, whatever. So, but they can't figure it out. And, there's a lot of little pieces that they're missing as far as their patience. There are a lot of things that they'll learn with time, but you guys can get, that kind of knowledge here through iLi Academy, and I can kind of guide you so that you can kind of miss some of those missteps that other people are making, as they're learning through YouTube and things like that. You get some more professional guidance on how to kind of get your pips and be happy, with your trading. Now here on this CAD yen, this is a 15-minute chart. We're going to go up to our 30-minute chart. We can see here on the, we're above the 720 because our 720 is down here. We're out of order here. Our 200's above our 100. Our 50's on the other side of the 200. The 8 is kind of crawling over the 21 right now. So I don't have a lot to, to give you for this. As far as a trade wise, I think we have some other things on the table that are good. We're going to let this straighten out. We're going to see if this straighten out to the upside. If we start to get a real mature trend to the upside, then we'll figure that out. We'll figure out what the opportunity is then. But right now, there's nothing here that tells me that I want to really even be a buyer here at this point in time. We're still above the 50 here. So we'd have to pull back past, the 200 or the 100 here for me to want to place my order on the 50. And my 21 is really close to the rate right now. So there's no point in me buying there. I'm not going to guesstimate that when I've got other orders that are probably a lot more set up than that. On our Swiss yen, we've got our 720 down here on the bottom. We've got a mature trend actually to the upside. This is mature, but it's new. So we did pull back here. We didn't quite pull back to the 50. We only pulled back past the 21. If we placed our order on the 21 as an aggressive trade, then we would be happy right now because we've got some pips made out of it. Maybe we made 20 pips out of that. But if we're more conservative and we're waiting for a pullback to this 50 or this 100, that might be a little bit better. We're just not in it yet, but this is very new. So if this is going to be the direction that we're going to go in for a while, then fine. We'll just kind of be patient and wait for it. This is something maybe you'll put on your docket and say, okay, we have mature trend. Maybe that's something that you're writing in your journal as you're setting up your week. You're writing down, which ones are actually in mature trend. So you don't have to remember, you don't have to go back and reanalyze it. You've already got it written down. It's only Monday evening. So, you've got the rest of the trading week, but you can always refer to that paper and go, okay, these are the things that I see as mature trend. And then as they fall off, maybe you cross them off. As they start to pull back, you can say, okay, this is the opportunity. This is a real opportunity for me. This is the one that's on fire for me right now. So let me go and get this one, the hot trade for you. So, so this is, this is not very difficult. It's not a very difficult thing to pull off. Euro Aussie, as far as the Euro Aussie, we have mature trend to the upside. This one paid us quite well. We had I want to say a platinum trade today based on this for a client. He actually was in it twice. I think he still might be in it. But, we were able to move our stop loss up here. We got taken out on this little pullback, but then he got back in and then he was able to ride up to on some more of this. So we're getting a bunch of this trend on the platinum trader right now. And the move here would have been a buy on either this 100 or the 50. I think the 50 would have been the only one that we could have bought on, but it traded very, very well for us here. I think close to that. I think over 100 pips today. So this was a nice move too. And you want 100 pips nice, smooth, and easy. Sometimes that happens for us, especially when we've got established trend here. We had established trend and all we're doing is waiting for it to break out again. It's not always going to happen like that, but that's what we're looking for. Just kind of for it to, take its time and break out again. And once it breaks out into that trend, we want to ride that, as much as possible. Euro CAD, we're breaking to the upside here, but we're sitting right here on the 720 right now. So taking anything here is a little bit against trend. The only thing I would do since the 720 is out here is maybe, place my order, a short order here on the 50 or the 100. Maybe even this 21. If you're a little more aggressive, you can take it on the 21. We'll see. We've got a full trend to the upside, but we're underneath our 720. So I always respect the 720 as my overall direction, because that's telling me for a much longer time frame, what direction we've been going in. So I don't know if we're really going to change direction here. So I'm just going to kind of wait and see what happens here. If I'm placing any type of order, it's going to be here based on this 50 or this 100 for my short. But my stochastic right now is not really telling me it's letting up. We're headed towards this 80. We're kind of turned up a little bit. We're going to see if we continue past this. And if this 720 becomes a floor, then, or a support for us, then we're going to wait for these moving average kind of jump over the 720 and give us full trend to the upside, but above the 720. We've got the 720 out here for our Euro Swiss. We've got our 200, 150, 21, and 8, pretty much mature trend. It's a little bit thin here, but we've got mature trend to the downside. So our order last night would have been a short on the 200 and the 100, maybe this 21 since they're so close. And would have got a few pips out of it. Wasn't a huge move down just yet, but we still got some red on the screen right now. So maybe the move is just, this is Euro Swiss, so it doesn't move, hugely all the time. It's not going to always be these huge moves like we see here. Every once in a while, it kind of break into that, but we expect a little less movement out of the Euro Swiss. It's always kind of been that way. Well, they were coupled together. They were coupled together by the Feds, the Federal Reserve banks, where the euro and the Swiss kind of decided to peg them together for a long time. But in 2015, they unpegged. So, but even so, it's always, in my mind anyway, it's always just been a slower trade. And I think it pays less too. Like per pip, it pays a lot less than some of the other currency pairs too. So it wasn't one that we were always really eager to play with, because if it pays 20 or 30% less than what other pips are worth, it just wasn't worth our time. But it's an opportunity. There's still pips to gain. It's still money to be made. So if you like that, you can trade that. Euro pound, we have rate above the 720. We've got our full trend going on here, but we don't have mature trend because some of the moving averages are still below the 720. So we're going to see what happens here. Every time we get excited about that kind of situation, we've been kind of, hit and it doesn't work out. It kind of falls back. Like here, we kind of got excited about it and we're above the 720. Everything was kind of setting up, and then we fell down really, really hard. So that seems like it's the characteristic of the euro pound right now. I don't know really why it's not just gaining that momentum. It's kind of, that cross pair, just, there's a big battle right now between the euro and the pounds. So, so when I see this, I don't get super excited about it. I really want the mature trend to develop for me. If I'm doing anything right now, I'm just kind of holding at this point in time. If we pull back to the 100 or the 50, or the 50 in blue and the 100 in yellow. If we pull back, then that means rate probably is going to be underneath the 720. So I don't really want to buy beneath the 720 either. So that's why I'm saying this for me is a no-go right now. That's not something I'm interested in trading. There's better opportunities. Euro yen, we are trading above the 720, right? We're above our 720, but then our moving averages haven't quite got there yet. We've got full trend to the upside on the moving averages. But our 50's just getting over our 720. Our 100's still way behind. We've got to wait this one out, see what happens, what develops, and whether or not we're going to get that move to the upside that completes the trend, development above the 720. As far as the Euro New Zealand, we kind of were seeing the same activity in the Euro New Zealand as we saw in the Euro Aussie. Those are kind of sister currencies anyway, so that they kind of work the same way. Looking at this, we had a straddle candle here, but we got a almost like a doji candle here, and we were below this, below the 720. So this is against trend. So this would not count as a catapult for me. I wouldn't take it that way. I typically just take it based on the strategy itself. Probably would have paid us out if we did take this second candle here, or the second candle after the first close. Probably would have paid us, but at the same time, it's a lot of risk to take. I want to do it the way the strategy says to do it. But we've got trend, mature trend has developed here. We just got the 200 jumping over the 720 here. And so mature trend has developed. We're waiting on pullbacks. We're just waiting on pullbacks to the 50 or the 100. Or, if it's very strong, it's probably only going to come back past the 21. So we'd be placing our order on the 21 as a little more aggressive trade. As far as the Euro US, rate is above the 720. We've got trend kind of setting up to the upside. We've got our 50 over the 720 right now, but our 100 and our 200 are lagging just a little bit behind. We're going to wait till this jumps over. We're going to wait till the moving averages all jump over. We have mature trend before we do anything. As you can see, there's weakness right now in the euro versus the dollar. We remember that news for the dollar. When we don't have the stimulus, the Dow Jones is falling, which means the dollar is gaining strength, and so that's going to tap down the euro a little bit, and that's I think why the euro kind of faltered at the end of the day. The second half of the day today kind of faltered. So I'm really not, I'm going to be cautious of that. It's a major pair, but I'm going to be cautious of that right now. I don't see where that's going to be an opportunity for me. I did have, we did have a catapult straddle here, but we were underneath the 720. So we did get this straddle here. I just want you guys to get used to seeing the straddles and understanding why you take it and or why you don't take it. Here's a straddle candle. The second one was green, but we're underneath the 720. So that tells me don't take that trade. It would have been profitable if we did, but it's just against the rule. And so our discipline and whether we're successful or not is how we follow the trade itself, how we execute the trade more so than what we make from the trade. Because if we execute it right, we're probably going to make money anyway. So that's kind of like the afterthought. The idea is we're successful when we do our disciplines. Okay. So that's all of our charts tonight. We went a little bit longer than normal. I'm glad because it is Monday, just Monday night. So we've got a lot of trading week ahead of us. We're going to get up in the morning and we're going to do the daily market overview show, talk about the fundamentals and see what's going on with that as well. We're thinking of adding some more language shows in Chinese, Portuguese, maybe some Spanish. Hopefully I can develop that out. Or at least we're doing market overviews and then maybe teaching some of these strategies in those languages as well. So that's something that should be coming down the pipeline here, hopefully shortly as we wrap up business. And I think that's something that's missing from a lot of, programs, unless it's a bigger program, a bigger firm or something like that. They typically don't have the different languages, but I'm in a situation where I'm around people that have the different languages. So, I might as well utilize that and try to get the content going and give opportunity to people to learn in other languages. And because I think it's that valuable, I don't think English is the only language we should teach in. I think we need to teach in other languages as well. And I met someone today too that may help me develop iLi Wellness, the wellness company. I don't know, you guys knew that. I'm big into certain things wellness wise, as far as like mindset or whatever. Of course, I wrote the book, the trading book about mindset too. So going along with that is, positive mindset, setting yourself up for success. I talk about, my beliefs a lot in the $5 guide to changing your life, the other book that I wrote, that's on the website as well that you can get. So those ideas will be expanded more when we have someone who's creating content. We're going to have someone who's creating content for that, so that you can really begin to, like, if that's what you're into and you're interested, you can start transforming your mind and building more success into your life. So we have a lot of exciting things kind of coming down the pipeline. Hopefully, you guys, will take advantage of that. And, the positivity will be overwhelming for us. So once again, this is Derek. I'm with iLi Academy. I hope that you guys all got some great trading ideas out of what we discussed tonight. I hope that you're so far having a great trading week. And if you need, we have the auto traders. If you need services, we have the auto traders. If you don't have time to trade, we have those auto traders that can trade for you. If you don't have the knowledge yet, the auto traders still can trade for you. We even have an alert service that we can run as well. So we're going to be tapping people to run the alert service so that when these catapults happen, we send out an alert. When trades pull back, we can send out an alert. We have some other strategies too. I have the 38 special strategy. We had a CCI strategy. I don't know if I've got that written down somewhere. Maybe that's in our course. I put them all in our course. We've got the Fibonacci retracement. I haven't done any Fibonacci's in a while. So we have Fibonacci retracement. There's a lot of different strategies that we can use to actually gain pips. There's a lot of different ways to do it. So when we start putting, we're going to teach these strategies. And then when we start putting out the alerts, you're going to get the actual strategy name so that you can walk through the trade and understand why we chose that particular trade. I don't know, I know we'll include like at least a picture maybe or something, maybe a picture of the chart or something. I don't know, maybe we'll do it like that, or maybe we eventually will do small videos like, okay, here's my analysis on this, like a quick 1 minute analysis type thing. Here's the analysis on the trade, boom, boom, boom. And then when maybe get it on your cell phone or whatever, you go to the web page, you subscribe to the service, you go to the web page. When that alert comes in, you're going to be able to click on it, say, okay, here's a quick video. And most of the trades that we do are going to be pending orders. So it's not like, okay, the order came in right now, I have to jump on it right this second or I'm going to lose it. We're going to set you up with pending orders so that you have time. If it's a half an hour before you go to lunch at work or something, we don't want you to feel like you're missing out on trades. We're going to set up this trade where you can wait till you get on lunch, watch the video, and then decide whether you want to take the trade and you're not rushed. So that's another service that we're going to be, offering here too. It's all set up. It just, we just need clients for that particular service and we can run it. And then we're going to give you opportunities. Like if somebody's telling you where the catapult showed up and we're setting it up for you, I think it's a very cool idea for you. And you can gain pips, and you do need some small knowledge though. And we're not going to say you don't need any knowledge. If you're trading manually, you should be going through our trading program, because it's a start to finish kind of trading program that's going to give you the basics and the foundation. And that's included with any of the services that we offer. If you're paying for any of our services, you get that training program as well. So you're going to be able to, understand what it is we're talking about, the terminology that we're using, how to read candlesticks, how to, all of those types of things are in there. Margin, leverage, we talk about all of that, goal setting. We talk about a lot of things. There's a lot of pieces to that training. So take advantage of it. Don't just think that you're going to get it or you just only need a few pieces. You need the full gamut if you're really going to be a trader and be successful. Our success is based on whether we place trades correctly, but our as far as like strategy wise, but our success is based on the type of knowledge that we're taking in, how well we're developing our trading mind, and then develop our trading plan based on the information that we've gotten. So I'm going to leave it there tonight. Once again, like I said, my name is Derek with iLi Academy. Got a lot of exciting things going on. Hopefully you guys stick with us and then tell your friends. As we ramp up the business, I think you guys will be benefited quite a bit. All right. So I'm going to let you go here. I hope that you all have a great night. If you're running the auto traders, make sure your machine is on. Okay. Ciao. Good night. Bye-bye.